Welcome to Understanding Business Structures. We specialise in social impact consultancy. We also offer advice and training and workshops and programs on all things social enterprise and social entrepreneurship. Our Careers Transitions program works with people that are transitioning in their careers and wanting to either set up a new business or a business, or wanting to further their career aspirations. So we look at entrepreneurship. So today we're going to look at the different types of legal structures, not just social enterprises, but all legal structures. And we're also going to look at maybe some of the different financing options that are available to each structure. So let's begin. Understanding business structures. So the first one that we'll look at is a sole trader. And as the name suggests, it's you as an individual. You are the business. You would register this business with HMRC, and this is so that you can pay your self-assessment tax and also contribute to your national insurance, make national insurance contributions. The one drawback and disadvantage is that you are personally liable for any debts and bad decisions made by the company. But pretty much easy to set up, and you're ready to start trading, effective immediately. To reduce your liability, the next one to set up would be a limited company. Now, this means that you become a director of that company. You are not the company. The company is a separate entity to you, which means that any debts are not on you personally, they're basically made on the company. With this, you'll be regulated by HMRC and Companies House. So you have two people who you have to answer to yearly. One, to pay for the registration for the limited company, and two, to pay again your tax, employer's tax, and national insurance contributions. It's a little bit more administrative to set up, but again, it safeguards you as an individual and leaves you as a separate entity from the company. So similar to a sole trader where you're liable, a partnership is the same sort of similar thing. But partnership, as the word suggests, is two entities coming together. And those two entities can be two sole traders coming together, for example, or maybe a sole trader and a limited company. No matter which it is, each party will come and have to decide how they're going to work out their own tax and national and insurance, however it is that they come about the partnership. They'll also be looking at a partnership agreement also, just to be able to divide up roles and responsibilities. And here, HMRC are going to be the regulators for you. Again, similar to a limited company, if you want that extra sort of peace of mind, then a partnership, a limited liability partnership, means that it is a separate entity to you. So, same as the limited company, you would register this with HMRC and Companies House, and at least then you have the safeguarding and knowledge of knowing that the company is a separate entity to you. So now let's take a quick look at social business models, social enterprises or not-for-profit organisations. Here we need to look at four important factors. The first is the legal structure, of which there are several, but I'm only going to cover a few today. The social impact, such as who are you looking to help and support, the purchaser, who is going to buy this help and support that you're looking to provide, and how are they going to pay for it. So will it be in the form of grants or loans or commissions or contracts? Let's have a quick look. So the first example would be an unincorporated association. For this, you'd need at least 3 members, a chair, a secretary, and a treasurer. You'd need to sign a constitution, and then you'd need a bank account with 3 signatures, or 2 is the minimum. The Tenants Association is an example of this, as it's social benefit or the social impact is to help and support their local residents and their local community. The purchasers of this service would be the local authorities or charitable foundations, and how it would be paid for would be through grants, donations and sponsorships. So the next level up from an unincorporated association will be a limited company by guarantee. It's the most common legal structure there is when it comes to social enterprises or not-for-profit organisations. But business under development is an excellent example of that. Its social impact is to work with individuals and change makers and social enterprises. Its purchasers, the people who buy their services, are grant funders, local authorities and local governments, and how they usually pay for this would be through direct payments or contracts, grants, commissions. The latest addition to the social enterprise family would be a CIC, which stands for Community Interest Company. Now these are very much similar to a limited company by guarantee. It's only that the directors of this can actually get paid, whereas they can get paid in a limited company by guarantee as well, but it's a little bit frowned upon. Here, an excellent example would be an organisation called the Mentoring Lab. It supports young people and low-income parents, and its purchasers of their services are schools and local authorities and UK governments. And the way in which they get paid are through direct payments, invoicing, contracts, grants, commissions. As you can see, it's a diversification of income that they can get. They're regulated by HMRC and Companies House, and in addition to that, every year they have to write a statement to prove that there's still a community interest company to the CIC commissioners. A very quick overview of the different types of business structures that are available to you and your business. To be honest though, the only one who can decide which one is best for you is you. But if you'd like more information and more details about the different business structures, then you can contact us on www.forbusinesssake.org.